If we could please stand to the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, first up, I believe we have Tom Peet here to review the audit with us.
Okay. Good evening.
Hi, Tom.
What we have is this evening is the audit report for the school for June 30th, 2012. There's actually 3 separate documents. The largest one is the financial statements. There's a second set that are the internal control and compliance reports. And then there's one that is the extra classroom activity fund report. So there are 3 altogether.
Excuse me, you want to ask who wants?
Yeah, I have hard copies if anybody doesn't want to look at their screen as we go through this, up to you. Okay. Those are all yours. The format of these reports is mandated by state ed and the Governmental Accounting Standards Board. There's an awful lot to these. There's a certain amount of repetition. What I thought I would do, so I think it's more meaningful to you as the readers, is to hit the high points, point out some things to you that you need to know, need to see, rather than going through a 52-page report. So let's go to the financial statements first, which is the largest document. The way this is set up is that there are 7 or 8 pages at the very beginning, the numberings at the bottom. This is actually the discussion and analysis section that's put together by management. In other words, this is not ours. And there's some good information in here. The only problem with the numbers is that they're using the net asset concept. In other words, is if the school take all the funds, mush them all together, you come up with total revenues, expenditures, assets, and liabilities. So I think it's more meaningful to look at the individual funds results as opposed to the numbers in here. But I do think if we take a look at page 7, that's the last page of the MD&A, and what we have here are management's comments about how things are now and the economic factors in next year's budgets and rates. So these are some thoughts on where the school is and where it's going financially. At the time these financial statements were presented, or prepared rather, the district was aware of several circumstances that could affect its future financial health. And there's some bullet points there. The board is still in negotiations with the unions. Negotiations are expected to be difficult this year due to the economic conditions. Same everywhere. The retirement system rates are expected to increase again. Tier 6 was implemented with the expectation of providing for long-term stability and solvency. The revenue side is not expected to improve much for this year. State aid is not anticipated to keep pace with rising costs. The federal stimulus funds have ended, and there's now a 2% tax cap that will restrict the district's ability to generate revenue. And the district's options are a combination of things, including reducing staff, cutting expenditures, and depleting or using fund balance. Health insurance, of course, continues to go up, and further efforts tied to negotiations in an attempt to get more employee contribution, that's ongoing. Enrollment is stabilized, and if you want to look at any one thing, continued gas prices, the increases not only affect the cost of fuel and diesel, but shipping charges and the cost of food and virtually everything else. And now we hear that they will go down a little bit, but we do with that. So those are some highlights as reported by management in this section of the report. So then we get into what is really our part, financial statements, and mainly the opinion. The opinion on the financial statements goes on for a page and a half. The reason it's so long is it's a combined report on the financials and also the federal monies. There's also a schedule of federal awards towards the end of the report. So we're forming an opinion on the overall report and also the federal funds. And what we're saying, the third paragraph, and then all over again in the very last paragraph on the next page, that in our opinion, the information and the financials that follow are fairly stated in all material respects. So in other words, this is a clean opinion on the overall report for the school. There are no qualifiers or issues that are raised in the opinion itself, even though it's a fairly lengthy report. The table of contents follow. There are 7 main schedules. There's about 20 pages or so of notes, and then there are supplemental schedules. For those main schedules, numbers 1 through 7, about half of those are done utilizing the net asset concept again, when you throw all the funds together and create totals. And the rest of them are using the funds concept, and I think we'd like to look at those more than the net asset piece. So if you take a look, flip the page, Schedule 1, the number of again is at the bottom. Now, this is the balance sheet for the school if it were all, again, all thrown together, all the funds. The thing I wanted to point out here is under liabilities. The very last item under liabilities, other post-employment benefits, that $3.9 million amount. The schools have to have a study done every year by an actuary, and this represents the present value of the health insurance costs going forward 30 years. In other words, we take $4 million today, invested at, say, 4%, to accumulate the $20 million that's projected liabilities after 30 years. So this is really just food for thought, this number. It's nothing real. It's not, there's no money there. It's not, you couldn't even fund it if you wanted to. There's no reserve currently available. But it gives you some idea. This is only the third year of this OPEB study. So we're 3 or 4 years into this and started performing. So that is that. If you go over to page the Schedule 3, Schedule 3 is the balance sheet for the individual funds, general, special aid, lunch, capital, and debt service. The reason why we have capital in there with no numbers is that basically state ed wants to see all the funds, whether there's any numbers or not. Otherwise, it's like without fund. Actually, the capital project wrapped up this year. Now, in the general fund, there are total assets of $5.7 million. Most of that is in cash or investments. Liabilities are about $1.3 million. So the difference between those two will give you a total fund balance of $4,414,000. Now, how the fund balance pieces are reported are different than a few years ago. We used to list all the reserves and the reserve for encumbrances and so on. Now there are these restricted and assigned and unassigned categories. Basically, that restricted category are the reserves. The assigned number of $831,000, that is a combination of the reserve for encumbrances and the appropriated fund balance. And finally, the undesignated is essentially what's left over. Now, this year, there was a pretty dramatic shift from the unassigned category to the restricted, mainly because there were 2 reserves that were created towards the end of the year. I think a workers' comp reserve and a reserve for benefits, was it? So in an attempt to get closer to the 4% fund balance rule. And you're very close now, you're at about 6% of next year's budget. In years past, it's been 18, 20, 21%. So really, there's been a shift of the fund balance from the unrestricted into restricted or reserved. As an example, the unassigned number the year before was $2.5 million. This year it's $740,000. So overall, a very healthy fund balance for the general fund. Special aid fund basically does not generate a bottom line. It's there to run the programs, federal programs for the most part. School lunch, for the first time in recent memory, actually has a fund balance. So total fund balance for the school lunch fund is $14,321. A bit more on that when we look at the revenues and expenditures. And then the debt service fund really exists just to accumulate things to pay the senior bonds. So overall, it's a very healthy balance sheet at this point in time. There's money, there's fund balance. to page 5, schedule 5. So we have those same categories, the individual funds, general, special aid, lunch, and so on. This time we're looking at revenues and expenditures. The general fund had total revenues of $11,077,000, total expenditures of $10,879,000. So there was an excess of revenue over expenditure of $198,000, and then there were transfers to the lunch fund and special aid of $45,854. So in the end, there was an overall excess of revenues over expenditures of that $152,061. So the fund balance actually went up somewhat in general. Special aid, again, is designed to break even. Whatever isn't covered by special aid projects is absorbed by the general fund. Lunch fund. Okay, so for the year we had $272,345 in revenues, which is good, except the year before it was about $301,000. The decrease is pretty much in the federal reimbursements. Total expenditures are $289,031. So there was a loss before the general fund transfer, but then when you throw that $40,000 transfer in, that's where you generate the profit for the year. And you take the prior year deficit to end up with the current year fund balance of $15,000. Now, you see that the general fund is subsidizing lunch by $40,000. In reality, it's more than that because about $55,000 in employee benefits were absorbed in the general fund. So really, it's closer to $95,000. That's not the general. But there was, again, for the first time, a long-term fund balance. So, as far as the overall revenues and expenditures are concerned, pretty good. How are things going with lunch this year? Can't imagine doing much better than any other districts. I don't think that the lunch requirements have been met with universal acceptance.
Not only money, but nobody needs to put it.
Right. Yeah.
What there is of it.
So, that is a problem. Okay. Those are the two main schedules as far as the funds are concerned. If you take a look at Schedule 7, this is the statement of net assets for the trust funds. This school has quite a bit as far as trust funds are concerned, $263,000. Various endowment funds, and then the agency funds. All right. And first of all, any questions about the main financial schedules? As far as the notes are concerned, they are very much boilerplate and very similar in nature to the previous year. There are a few things, though, you want to take a look at. Now, on the balance sheet, we saw the assigned, unassigned, and restricted categories for the fund balance. Once you get into pages 8 through 10, this is the detail of what's really there. In other words, it talks about the debt service reserve, the employee benefit accrued liability reserve, and tells you what the makeup is of those categories. And specifically over on page 10, there's kind of a laundry list there of what makes up that restricted fund balance. It includes the insurance reserve, the tax surcharge, employment benefit reserve, unemployment insurance reserve, and then the workers' comp and retirement contribution reserve in this year, and the debt service fund reserve. So that gets back more to the real world accounting as to what the real reserves are. Over on page 11, the last note, apart from note 1, which is Peet, subsequent events. Basically what we're saying here is that management has reviewed events that have happened after the end of the year, between June 30th and the date of these financials, and feels that everything of significance are reported in this report. Over on page 13, under stewardship and compliance, talks about budgets and so on. The last paragraph on that page. We say the district had no violations of finance-related legal and contractual provisions, except for the fact that you're over the fund balance rule by a couple percent. Again, that's a whole lot closer than in years past. Over on Pages 16 to 18 is a great deal of detail of the debt that the school has at the end of June. And in particular, over on page 17, it has all the serial bonds, the issues from 2003, the 2010 issues, and the recent bus bonds from 2011. So as of the end of June, there was $9.7 million in outstanding debt. And then there's a summary there of the principal and interest requirements going out in the future. Pages 18 and 19 talk about the pension plans, kind of boilerplate. One thing to look at, probably on very surprised, on page 19. In the middle of the page gives a recap of the last 3 years for the amounts paid out for the retirement system and the teacher's retirement system. As you can see, going from 2010 to 11 to 12, it's gone up a lot. So, I'm not very surprised there either. Which is a budget nightmare, I'm sure. Note 10 talks about that OPEB number, that $4 million number that was over on the balance sheet, the other post-employment benefits. Over on page 20, there's just a schedule there to show how it's developed, but basically the way the actuary sees it is that the total liability going forward in these 30 years is a little over $20 million. The current amount is $3.9 million. That is basically it as far as the notes are concerned. What follows is pretty much a rehash of what we've already looked at. There's a budget to actual schedule later on. I will tell you that there were no major appropriation areas that were overspent. In other words, general support, construction, transportation, that kind of thing. In other words, there was budget money in all these categories. The revenues came in pretty much as expected, except for some miscellaneous things like OC's refunds and some of the oddball things. But budget-wise, you stayed within your budget constraints, and again, what the budget was last year. So that's the main part of the report. In the overall, I think it's a good report. I think that we're in a lot better financial condition than very many districts. We have created some reserves this past year. We have some flexibility. How are the negotiations coming? Any end in sight? Or?
Pretty much so. Yep. Bruce.
Great. Wonderful. So, if there's no more questions on the main part of the report, we've got some comments in the internal control and compliance report section. Obviously, first of all, there's a table of contents on page 1. There's a total of 6 letters here in the reports. What I will tell you for letters 3, 4, 5, and 6, those deal specifically with the federal money. We do quite a bit of work with those programs, and we have reports in there. Compliance requirements that have material effect on any programs and so on. And what you'll find if you read those reports is those are clean opinions. In other words, we say that there are no findings or question costs. There are no issues as far as the federal funds are concerned. There is a schedule of findings and questions costs, but there's really nothing there. In other words, we're not saying you need to give back $30,000 of federal money or something like that. So, items 3 through 6 are pretty much clean enforced opinions. All right, let's take a look at the first 2 letters then. We have a communication letter. This is our letter to you. Obviously, we work with management and the business manager and superintendent during the course of the audit. We're also available during the course of the year if you have questions or whatever. But in the end, we report to you. So in this first letter, and the page number is page 3, basically we say that we've audited the financial statements, and here are some of the things that we have to report to you. Our responsibilities under U.S. generally accepted accounting standards, and that OMB Circular 8-133, that's what governs the federal funds. So basically what we're saying is we set out to express opinions about whether the financials were correct, and we were able to do that. We considered internal control over compliance with requirements that would have a direct and material effect on the programs. We do say towards the bottom of page 3, in that last paragraph, that while our audit provides a reasonable basis for the opinion, it's not a legal determination on the school's compliance with various requirements. It's just an overall opinion. Page 4, the plan, scope, and timing. I came here on June 4th to talk about how I figured the audit would go, and I will tell you that it went as planned. We planned on it coming on July 23rd. We were here on the 23rd. We did field work to wrapped up in the office, and so there were no major stumbling blocks along the way. Audit findings. We say that management is responsible for the selection and use of appropriate accounting policies. We also say that there were no new significant policies implemented this year, and no major changes, and that all significant transactions that should be recognized in these financials have met. We talk about accounting estimates, and obviously there are budgets, and there's the OPEB liability, and 1,000 things. We do look at major estimates and feel that management has a reasonable basis for relying on such estimates. There are certain disclosures that are more sensitive than others, and we point out that GASB 45, that OPEB liability note is a huge number. If nothing else, it's something to think about. Difficulties encountered in doing the audit. We encountered no significant difficulties in dealing with management in doing the audit. Corrected and uncorrected misstatements. What this really means is if we propose an audit adjustment and management says, well, if we make that, it's going to make things look bad, and we refuse to make the adjustment, or they give us a hard time about it, we have to tell you here. That wasn't the case. We actually didn't make that many adjustments, and the ones we did make were guidelines we defined for business management. Disagreements over on page 5. Disagreements are actually defined here as it relates to this report. We didn't have any such disagreements. Representations, we received a letter of representation from management. This just basically says that everything we asked for was provided and everything is correct, best of your knowledge and belief. Other consultations that you may have had with other accountants, were not aware of any such consultations looking for better or different opinions or reports. Other findings or issues. We do discuss a variety of things we can anyway during the course of the year, but none of these things really have an impact on the audit. Other matters, we talk about the supplementary information in the main report for federal monies. We compared and reconciled this information to the underlying accounting records. There were no issues there. So this would be an area where if we had some problems, we would have to pass them on to pretty clean letter here. The last letter that we'll look at in this section, this is what's commonly called the management letter. On page 7, we define, I suppose, internal controls, deficiencies in internal controls, weaknesses. We have a couple of comments over on page 8. First of all, everybody's favorite comment that is there. If you were over 4%, the fact that you're over 4% and you were at about 6%. But once again, it's much closer than it's been in recent years. All right, extra classroom activity fund. We have a couple of things here. Last year we had a comment, this comment in the report saying that the extra classroom activity fund really needs to have its own sales tax exemption, its own certificate. Typically over the years, the extra classroom funds that been piggyback on the school's exemption. It's not the way it's supposed to work. I don't think much progress was made this past year on getting a separate exemption. SED and the Comptroller's Office would really like you to do that. So I guess it's time to pursue that. All right, other matters. During the course of our audit of the extra classroom fund, we noticed several areas that need attention and improvement. While the bank reconciliation was done in QuickBooks software on a monthly basis, the recon did not match the actual cash checking and checkbook balance. And the discrepancy grew on a monthly basis throughout the year. There were numerous posting errors and many expenditures were not quoted correctly. And also there was some receipt documentation missing initials or signatures. Now, the internal claims auditor appeared to have reviewed various reports, payment vouchers, and receipt documentation sometime late May 2012, but there was little indication that this work had been performed at other times during the year. We felt that if more timely oversight and assistance had been provided either by the claims auditor or someone else within the district, most of the errors that were made in keeping the books during the year would have been caught and corrected. And we would recommend that the district provide the central treasurer with needed support and assistance with the QuickBooks program and with general accounting and bookkeeping matters as it relates to the position, and with additional training and help that greater comfort level can be achieved. Basically, a couple of years ago, the former internal auditor recommended that the school start using QuickBooks for the classroom, which probably wasn't a bad idea, except last year he wasn't around for any guidance. And I guess from what I gather is there's really no one within the district that knows much about QuickBooks. And so it became a problem during the year. It's not an issue of something having been done wrong within an extra classroom, it's the accounting system. So we've talked to Kay and to Sue, and we're going to provide some help and some support. And I don't think it's going to take a tremendous amount of time, but the fact is that Kay has been attained to a certain extent. And when we came in to do the audit, there were some obvious problems. So there's nothing here that can't be fixed. So that's that. Now, as far as the extra classroom activity fund itself, the report itself is concerned, that's the third report. Having some bookkeeping issues does not necessarily mean that we have to issue a qualified opinion. And in fact, the opinion on the extra classroom report is a clean opinion. All right, we will satisfy ourselves to the numbers and the system in place, and we were able to do a clean opinion. Basically, there's a lot of activity here. If you look at this page 4 in the report, this is a recap by activity of the money coming in and money going out. And there was $91,000 coming in, $87,000 going out. That's a lot of money. That's not district money, it's student money. And having a really good handle on the bookkeeping and accounting side is important. So, that's it. That's what I have for you.
Does anybody have questions? I guess we're all set.
Okay.
Good.
So I think we'll be chatting here about the 9th, you said. Something going. Okay, thanks very much for your time.
Thank you. As you always do a great job at leading all of this.
Well, wading through this is one way to put it.
Yeah.
And those are all yours.
Have a safe trip.
Thanks.
Good night.
There's a path.
Are there any board member issues? And I have